Hi, welcome again to our Wise Guru Q&A. It's a Tuesday and it's going to be an interesting couple of questions today. It's actually a series of questions that were given to me by someone in Hong Kong. So, the gentleman's an Australian citizen, obviously an Australian expat, living and working in Hong Kong, and he has a partner who's from the US, and she's a US citizen. Now, this gentleman wants to buy an investment property somewhere in the inner suburbs of Melbourne, and he thinks he's going to spend between $1 and $2 million Australian on this, and he wants to know quite a few things. But it's interesting because people have these questions and quite often they put different questions together as one, and we've got to actually then pull those apart and answer them properly. So in this instance, his question is, look, you know, there's myself and my girlfriend, I'm Australian, she's American, can we get a loan together? And then he said, or does that mean I then have to pay the extra 8% tax? So let's work through that, because A, the answer is yes. An Australian citizen and a non-Australian citizen can apply for a loan together depending on the bank or the lender that they approach. But then the whole application generally tends to be treated as the application of a foreign person. So, as I said to him, let's go and either cover the things from a bank lending viewpoint first, or perhaps from a tax viewpoint. And we've got to sort of put those two issues, pull them apart, basically, because if you're going to buy a property together with a foreign person, then certain things will happen. For example, the foreign person surcharges will apply. So in Victoria, you know, there's an extra stamp duty surcharge, or in New South Wales, extra 8% foreign person transfer duty surcharge. There's an extra 2% land tax surcharge, and that's on a per annum basis. So let's think that through, because quite often you will get people where you've got, you know, an Australian married or together with another person from another country. What do they do? And there are ways and means to manage the situation, but it's important that we get to understand, you know, all of your needs, what your goals are, what you're looking to do with this property. You know, are you thinking of perhaps you're going to move to Australia at some point down the track and potentially live in that property? So there are things we need to know to see how we can perhaps point you in the right direction or make sure you're doing things correctly, because it does depend. So for starters, if you're a foreign person, unless you're buying a new property, you will potentially have to go through FIRB approval. Foreign Investment Review Board in Australia needs to approve you as a person who's going to buy an existing Australian property, an old property. So that's one thing. But if you want to buy it as joint tenants, you may not have to do that, but then you'll be exposing yourself to 50% excess transfer duty and land tax going forward. On the other hand, you could perhaps buy it as tenants in common, and it could be structured in such a way that it's 99% owned by the Australian citizen and 1% by the foreign citizen. So you can overcome a lot of these taxes which would otherwise have to be paid. It all depends on how we structure it. But then, if it's an old property, again, FIRB, so you've got to make sure you know what you're up against. In this instance, I said to him, look, it's probably best if you potentially just buy this property 100% in your own name, and we can get rid of these other tax issues and put them to one side. But then it comes back to his original question, can we get a loan together? The answer is yes, as I've just said, but in this instance, if it's just he is the buyer of the property, then there's a whole new other set of circumstances that come in. So basically revolving around income and expenses, which determines how much the bank is going to lend you. So he wants to spend between $1 and $2 million, and as a lot of you know, we can often get up to 85% loan to value ratio. So on a $2 million loan, that will be 1.7 million because you're a client of ours. And obviously that's beneficial because you would need to put in less of your own capital. However, the problem is that if you're a couple and you're both working and sharing expenses, and all of that's going very well, if we're only taking one of those incomes to service your debt, you may not be able to get enough of a loan from a bank to fulfill those needs. So that's what we're going to look at. So both people could apply for the loan, even if one person owns it, but the situation then will change again, because we would probably have to approach a different lender that's going to lend to foreign persons, whereas most of the large banks in Australia don't actually do that. So that means you could potentially have to pay a slightly higher interest rate, perhaps some other costs, and things that we need to look at in due course. So, you know, what do we do? Well, first things first, as I always say, let's perhaps put an application into the bank so we can figure out how much they're going to give you, your maximum borrowing capacity. And then we can go from there. So let's look at a couple of the other questions that arose out of this though. You know, if we don't get the loan together and the property is 100% in my name, can we only use my salary? Generally speaking, yes. But his question was, can we use a joint deposit? And of course the answer to that is also yes. So, you know, you've been living together, you've worked together, you've saved up money together, and you've saved up, you know, this, that's called $400,000, that's your joint funds. So certainly you can use joint funds to put in into the purchase of this new property, even though only one of the parties is going to be the legal owner of that property. And that's obviously going to assist from that viewpoint. But there are other things there, like if you're living together, quite often, you know, a lease agreement may be in joint names, or it might be in one party's name or the other party's name. So we've got to look at the split up of expenses that are both fixed and discretionary, and then work out where we're going to go. So at the end of the day, you know, you can get all of these questions and bring them out, and you can overcomplicate things to start with, because this gentleman then wanted to know, said, look, you know, where can I get some really good data about not just macro things, but I want to know really specific data about particular suburbs and even particular streets in terms of sale prices and rentals and vacancy factors. And look, all of those things are really important, but some things are less relevant, I guess, because you've got to look at things from a macro level, and as I pointed out to him, most of the data around residential real estate is generally, you know, lagging data. So if you're looking forwards, it's great to have that in terms of overall research, but if you're going to get too specific, don't get caught up in sort of perhaps a make-believe world where you think you're doing research on mark-to-market assets. In other words, if you want to get a research report on listed companies, whatever stock exchange they're on, they're generally pretty much up to date and far more relative, because he was looking at, you know, ROE, return on equity. And as I said, look, I think you should really look at return on equity in terms of those mark-to-market assets as opposed to residential housing, because at the end of the day, it's really about using the bank's money, other people's money, so your return on equity is going to be pretty good anyway, relatively speaking to, you know, when you compare it to other things that you could be investing in and having to pay higher rates of interest or having to utilise a greater amount of your own capital. So it's more about, as I said to him, being able to take the macro data, put it all together. Certainly the research is very important, but then have a look at how that's going to play out over the long term. Because as I said, you know, property investment is a long-term investment. And people forget things, but, you know, I certainly don't. I look at, say, Sydney property in between 2000 and 2010, 11, it virtually did nothing. You know, around 2% per annum return. So, you know, it basically stood still. Most people wouldn't even think about that, because they always think that, you know, Sydney property just keeps going like this. And overall, it tends to. But so do many of Australia's property markets. Certainly the East Coast capitals have been displaying that sort of behaviour over decades. But there can be decades where not much happens. So you've got to actually look at this as a very long-term investment. Don't try and over-analyse things. Just use great research to analyse things. And then, as I said, look, if you're looking back, you know, what's all this analysis actually done? You know, what have you bought to date? And the answer was nothing. So I think it's really important to be able to use that, but then actually do something, because at the end of the day, the longer you hold a quality asset in one of those markets, the better off you're going to be. And the return on equity will vary as the asset value fluctuates over time. So the important thing is actually buying the right asset and doing it at an appropriate time. And at the moment, I would have to say it's a very appropriate time, because COVID has come along. There's been a decline in many of the property markets around Australia, and that's now seemingly bottomed out and starting to pick up a little. So I think we're still at a point in time where there's, you know, a good chance of that continuing to run, depending on where you buy something, what you buy, many other factors, and that's why I say research is really important. But if we look at what we're seeing on a macro level and on anecdotal level in the marketplace from a research with our own clients, because the cost of funding is so low now, most people are looking to see if they can actually borrow some money and invest somewhere, because it makes sense. And then you have other people, and this is even perhaps more interesting, I'm getting people who have retired saying, look, perhaps I should invest in housing because I'm not getting anything on my cash in the bank. And you know, that's a far more difficult equation to run through, and you do need to, I guess, analyse cash flows and what's going to potentially happen over the medium to longer term. But if we look at the housing market at the moment, it's currently being driven mainly by owner-occupiers. So first home buyers, upsizers, downsizers, but people living in these homes. And what's going to happen, I think, in 2021 is that investors will actually join in that. They're going to enter the market because they're going to be looking for a price increase. And they're seeing that happen, which is being driven by people entering the market to buy a home to live in. And they can see that that upward pressure and upward momentum will continue to build. And all of the banks and economists now seemingly agree on the fact that, you know, Australian residential housing is going to increase in value over the next 1, 2 or 3 years. And it's just the amount that really is varied between them. And there are predictions of, you know, anywhere between 5 and 25%, depending on which market you're in, which market segment, etc. It's irrelevant. It's more about, you know, what is the trend? How can I utilise that trend and make it my friend, as they say, and end up with a good outcome somewhere down the track? So that's the important thing, and that's what I think people need to focus on. So basically, keeping your feet on the ground, making sure you know what you're doing. So before you go and analyse everything, spend the next 3 months working out how to buy a property between, you know, let's say $1.5 and $2 million, only to find out the bank will only lend you $500,000. So I think it's really important to, you know, be pretty sort of focused on what you're doing. Find out how much you can spend first, then continue on and make it a process-driven thing, so your research is actually meaningful, so you don't waste your time. Or, you know, even if it's not a waste of time, you're gaining some insights, but let's try and make them actually work for you. Because after all, at the end of the day, that's what you're really doing it for. That's what people do it for. Everyone's got busy lives, so I think, you know, make it count for yourself. That's the basis of this. We can then go through all of the other things, the legal issues, the tax issues, you know, transfer tax, land tax, income tax, if it's an old property, how much is it going to cost me in maintenance? If it's a new property, you know, what do I pay there? Let's look at all of that, and we can put that together. We have our own proprietary data analysis that looks at and compares these things. You know, we will actually create a property investment analysis report which gives us some pretty good quantitative information, and you can compare one property with another, generically speaking, and then hone that down if you have a lot of the data inputs that we would need to do that. So I think, you know, that's a really good example, and one that we've seen many times where you've got couples of different origins, so one's Australian, one isn't, and those questions often arise, you know, and it's interesting. I was speaking to someone last week, or maybe the week before, and they're friends of ours, and one of them is not an Australian person, and the other one's a New Zealand person. So also not Australian, but in their mind they're saying, well, you know, I'm a New Zealander, so I don't have to pay those taxes. Well, you really need to look into that, because unless you have the appropriate visas, or, you know, you're living in Australia, then you potentially do. So these are things that really need to be borne out, and a lot of people live in sort of areas of misconception, I think. So you need to clarify those positions before you charge off and do all this other stuff that may or may not actually work for you. So follow us on Facebook, Wise Guru on Facebook, or follow me on LinkedIn, Andrew Unterweger, and you'll get updates and posts in relation to all of these things. Reach out to us, send us your questions, because it's always great getting these new questions and real life situations. And as with this gentleman, you know, quite happy to contact us. We can arrange a personal Zoom meeting, and I can at least show you some of these items, work through your own situation and see what might be best for you. So this will be the last Q&A for 2020, and it'll be 2021. We'll all be back here, and we'll probably have a whole lot more new questions. But the other thing that we'll be bringing forward in January next year is our quarterly review with current market data on various Australian property markets, on the situation overall, on the lending markets and the changes that have been happening. So all really relevant, up-to-date information, and we'll be sending out invitations in relation to that over the coming weeks. I wish everyone a fantastic holiday season. I hope you enjoy Christmas wherever you are, as much as possible wherever we are, and we look forward to international travel resuming between Australia and as many places as possible next year, recognising that perhaps some travel bubbles will arise before others. And I wish everyone a really prosperous, healthy, happy 2021. All the very best.